Hello guys, welcome to this particular video, and in this video I intend to share with you this amazing Bitcoin trading strategy. And this strategy is a very perfect strategy you can use to trade Bitcoin uh, with a success rate of about 90%. Yes, the strategy has a win rate of about 90%, and it's actually what the big whales and people that trade with big money, this is the strategy most of them use to trade the market. So if you happens to learn how to trade this, use this strategy and implement it on your trade, you're already on your way to seeing a big success in your trade. So the strategy we are talking about is a very popular strategy, but not everybody knows how to use it, and most of the time people end up being trapped. And the strategy is called swing failure pattern, which is SFP. So what is swing failure pattern? So if we go over to Google, um, let's go over to Google. So you can see on the major swing failure pattern is a trade setup in which big traders hunt for stop loss above a key swing high or below a key swing low for the purpose of generating the liquidity needed to push the price in the opposite direction. I don't know if you understand. The main reason why we trade this SAP is because of this. This generate the liquidity needed. You see this? The liquidity needed. And yes, the uh the people that need this liquidity is the big whales that trade the market. Let's say let me use the chart here. Let's say at this particular price, big whale want to short the market from here. But unfortunately, the amount of orders that is available in the market or in the order book is not enough for them to fill their order. Like let's say they want to buy 500,000, they want to short with 500,000 worth of Bitcoin from this particular level. But the amount of orders we have on the order book is like $100,000. So eventually he won't be able to get all his orders filled because there is not enough liquidity in the order book for him to fill the order. So what will happen is that they tend to push the market above this high. And when they push the market above this high, they trap so many traders. Those traders that are being trapped, their money will be used. They will use their money to get in on the short and fill their 500,000 worth of BTC orders. Okay, I'm going to explain more about. Let me explain what I mean by that. So what happened at this particular high is that some other traders that trade with maybe 10,000, $20,000, they got in on a short here and they shorted the market. And market came back here. Then when they short the market, they have their stop loss above this high. And market came back here and took this high out and stopped them out. And if you went short, if you are shorting the market, for you to close your position, you need to buy. You need to buy for you to close your position. So when market is stopping them out, they are buying at this particular high. They are buying at this particular high for them to close their position. And for them to buy at this particular high, those sellers that have big amounts they want to use to short the market will now sell to them, and they will buy from those big whales that want to buy at this particular high. And then another people that got trapped here is people that are trading breakouts. People that trade breakout, we also want to buy breakout here. That markets are broken out, we need to get in and trade. Is market is bullish and all that. So they got in to trade the breakout here. And what happened? The big whales used their money to get in on a short. And market eventually pulled back into this range, pulled back below this swing high, and that was the reversal needed for the whales to fill their orders. So this is how the swing failure pattern works. Is basically meant to trap people, trap traders, people that trade breakout and people that got in the market early. So sometimes you could be on the right side of the market, but because you have a bad entry or because your timing is not right. Market can as well play you, and when you have been stopped out, you market will eventually go to the direction you were expecting it to go. So that's which is why the swing failure pattern is very effective. It requires patience, and it requires you to also be on alert when market is trading close to the range of the previous swing high or low. Okay, and to demonstrate how this works, I'm going to show you how Bitcoin swing failure pattern have worked with spotting the Bitcoin top. So if you look at this particular level here, you can agree with me that this is a swing failure pattern. This, look at this. This high right here is a swing failure pattern of this high. But we are looking at it on a 4 hours time frame. If we go to 1 week weekly time frame, we'll be able to see clearly. Okay, so you can see on this particular week, market came back to take out this high. As we took out this high, market closed below this particular high, which has made this to be a swing failure pattern. Is a good that's a good opportunity for you to get in on the short right here. Another place we have it was this all-time high, Bitcoin all-time high. Market came back, took out this high, and closed the weekly below it. That is another swing failure pattern. So the swing failure pattern is very effective pattern. We have another swing failure pattern right here as well. One thing with swing failure pattern is that it's used to confirm the actual reversal. Anytime swing failure pattern happens, it usually causes a major rally. Okay, so uh, anytime it happens, market tends to go way higher to the next liquidity zone. If you understand what I mean, this is another liquidity zone, market came back to stop people out here, and we start moving to the upside. The next liquidity zone on the upside is these highs. These highs right here are the next liquidity zone. So that's where you'll be looking to start selling your coins. If you bought at this swing low, you now look to start selling at these previous highs, because that is where we have another liquidity. So what happens is that swing failure pattern is very effective because the amount of liquidity market grab on this particular lows is enough to push it to the upside. The amount of liquidity market grab from this high is enough to push it to the downside. So the swing failure pattern is a very effective strategy, and you do not just take every swing trade as a swing trade, because you need to confirm. You need to see the market confirm that it's not able to push to the upside for you to confirm that the move is a swing failure pattern. Because if you look at so many other candles here, you will see where the market we did a swing failure pattern, but then market still end up breaking to the upside, like what we have here and also here. So it depends on the context, on the time frame you are watching it, because if this is a weekly time frame. So if it happens on the weekly time frame, it tends to be a longer duration trend. If it happens on the weekly time frame, if you see it on a 4 hours time frame, it could be more of a daily, a kind of a day to few days of a trend. Okay, so it depends on when you got in on the market. Sometimes swing failure pattern could happen, and after few days, and we could lost momentum, and market could flip and start going to the another direction. So I'm going to go over to the lower time frame to show you uh, how to trade this on a lower time frame, because uh, if you're waiting for some of these moves right here, some of the move on this smaller on these areas could, yeah, so a trade you could take on a 4 hours. This highs here, there are trade you could actually got in on the 4 hours and not from the weekly. So if you are waiting on the weekly, it could take you a long time for you to spot a swing failure pattern. So it's always good for you to start from a lower time frame. Also, you need to understand that swing failure pattern happens on the extreme peak of a major rally. That's where you used to pay attention. Uh, okay, so you don't just come in at the middle of a rally and start looking for swing failure pattern like at the middle of this rally now, you start looking at swing failure pattern. No, you look at the peak of a rally and where the like majorly where the rally starts and where it ends. If you know about yeah, Elliott wave, you could use beginning of the trend to the upside where the wave 5 ended and all that, where ABCD correction waves use it to determine where you could be looking for swing failure pattern. So if you look, this is a swing high. The high of this entire move was this. The high of this entire move was this. So it's enough for you to start looking for swing failure pattern on those peak of those highs. This is the low we made before market move to the upside. So it's enough for you to start looking for a swing failure pattern of this low for you to get in on a long position. Okay, so and by the way, Bitcoin is currently moving to the upside. And if you look here, we have a swing failure pattern as well here. Look at this, a swing failure pattern. This is highly effective pattern you could use to trade Bitcoin. It doesn't work that much often on altcoins. You can see swing failure pattern as well right here. Okay, so how do you trade this swing failure pattern? Now let me show you. To trade the swing failure pattern, you need to actually follow the trend. But then another thing that will determine how long you will be in the trade will depends on what the rally we are the rally when we got the swing failure pattern from. Is it a major rally or is it an intraday rally? What do I mean by that? If you look at some of these moves, some of these tiny collections, those are intraday move, and you do not want to take a trade on intraday move and you hold it all the way to week or months. Okay, because it's an intraday move and major traders might not actually be on that trade. Market could reverse easily when there's a big change in the market. So uh, if you look at this, if you look at this high right now, there is a swing failure pattern on this particular trade here. But this is an intraday, is intraday trade. It's not a trade you can leave up for weeks. Okay. So basically, if you got in on a swing failure pattern trade, is you are surely going to see a reversal from the market. But how far it could go is what we do not know. So you need to pay attention when you got in. You need to pay attention and watch how the price action is developing. So we have another swing failure pattern here. Yes, is the swing failure pattern. So like I said, it happens on the peak of a trend. You just need to pay attention and watch the trend and see where the peak is going to be. So always pick out the peak of a major rally. I'm trying to find other examples. You could use 1 hour, 4 hours, and daily and then weekly too for this particular trade. Uh, if you are a scalper, then maybe you could use up to 15 minutes for this trade. The particular time frame you use to trade this will determine how long you are going to stay in the market. Because if you are trading on lower time frame, there are chances that the buyers and the swing failure pattern we had on the lower time frame is not going to cascade to higher time frame. Okay, I'm not saying all of them, but majority of, if you got in on a 5 minutes time frame, you see a swing failure pattern on a 5 minutes time frame. That does not mean that the trend we are going to see a trend reversal on the daily time frame. So it's very important you know the time frame you are gotten in. If you got in on a 1 hour time frame, you could just hold it for a few days and then keep watching the price action to see how it develops. If market keep moving to the direction you are actually on a trade with on, you could try to move your stop into break even and keep moving your stop when market keep making the swing moves. Okay, you keep moving your stop loss there, so in case market stops you out, you will be in profit. So let's say we are trading this particular move right here now. Majority of Bitcoin reversal happens when there is a swing failure pattern. But what we need to find out is, are we on a major reversal or is it a correction? There are difference between a major reversal and a correction. So I will highly advise that if you are using this particular strategy, once the swing failure pattern occurs, you got in on a trade and market start to move on opposite direction, always move your stop to break even at least. And let's say this is a swing failure pattern, this is a swing failure pattern, and you got in around here, and market dump here and come back around this level. Then this is the next place you could move your stop loss, because this market have now, we have presumed that market have made a lower high, and you have to put your stop loss here, and then market push down, make this high again, we have our stop loss here again. That's how we'll be doing it until market stop you out, and this is where market would have stopped you out. Okay, and we will still end up in profit. So always make sure you check the market. But if you see this swing failure pattern happen on a daily or on a weekly time frame, that means it's going to be a very long trend move. What I mean by that is that if the trend reversal, if you see the swing failure pattern on a daily, that means the reversal is going to stay, is going to take long. It's going to be a big move to the opposite direction. Okay, if you go to the daily, let me check for, we have this swing failure pattern we had here. After we had the swing failure pattern, it took how many days for us to come down to that low again? It took up to 322 days before we come back to this low. Okay, so that's what I mean by the day, the time frame you got in, you used to determine the swing failure pattern will also determine how long the trend is going to be until market reverse or came back to that low again. So when you are trading it on a 1 hour time frame, always make sure you don't leave your trade open for a long time. Always watch the market. If you're already in profit, you move your stop. You move your stop in profit just so you could secure profit. You can secure some profit. And there are so many of them. If you go down to lower time frame, you see a whole lot of them. You do not want to, like, this is current Bitcoin price action now. You do not want to use this as a swing failure pattern, even though it's a swing failure pattern. But this is happening on a 15 minutes time frame. And you could short here, you could actually short Bitcoin at this price, but then you do not expect the short position you got in here to be the main reversal we need. If you're going to short here, then and Bitcoin move 2%, 3%, that should be enough for you to start taking profit or move your stop to profit. Let's say you got in here, it moved, it dropped to this particular low. That is where you could look forward to take profit, because this is the last swing low. You should look to take profit here. Unless we start losing, if we start to lose this low, then you could look forward to buying on this particular highs. You look forward to targeting this high here. Okay, so one of the ways you can use to determine a swing failure pattern is how long did we took before market go back to that high. It's very important you determine that, because if market made a high here, market made this high, and after few hours, this is like how many minutes? Okay, after 1 hour 40 minutes, market came back and took out that high. No, that is not a perfect swing failure pattern you want to trade. reason is because there are so many traders that trade on. There's so many swing traders, and they have intraday traders that trade on 4 hours time frame. And this swing failure pattern is not developing on 4 hours time frame. It's only developing on lower time frame, which is mainly for people that play scalp, people that play scalp and got in and got out of the trade. So if you're taking a trade here, a market start to move to this, started to go down from here, it's going to be a good, uh, it's going to be a perfect idea for you to start to look to take profit and pay attention to the trade. Okay, because uh, we came back and keep going to the upside. Okay, because this could be a big sell order, so a big well sold is Bitcoin right here, which could actually cause the market to drop like this. So the right way for you to determine a swing failure pattern is, let's assume this is our high. Let's assume this is our high now. What you need to do to do that to determine that this is a swing failure uh, pattern to watch is, if market make this low and we didn't test this low for many days, or we will start to move sideways or go down like this and start to come back here. If we are, the moment we are beginning to come back here, this is the moment you need to start paying attention to this previous high. Sorry about that. You need to start paying attention to this previous high. Okay, so market make this high, and you make this high, and since then market start to move to the downside, and you notice that it's taking a lot of time for market to come back to that high. Okay, it's taking a lot of time for market to come back to this side. Once it's taking time for market to come back to that high, you start knowing that this high is beginning to be a very important level for daily traders. Okay, is becoming a swing high and the peak of this major move to the upside. So when next market start to come up to this high, you start to pay attention and see the reaction we are going to get on that high. Okay, and see the reaction we are going to get on that high. And what market we usually do is that maybe we came back here and start to come down without taking out that high. A lot of people will try to short this particular high now because market seems like it wants to come down. But because experienced traders know that there are liquidities, we have liquidity on this high, which means this move to the downside is where there will not be enough liquidity to push this market to the downside unless this move take out this high and take out stop people out on this particular high. And once it stop these people out, people that are long or the people that are short early on here, is when we are going to see the perfect reversal we are all waiting for. Okay, so always when you see this, do not be in a haste or formal into jumping on the market, because this is when you are going to be trapped. Okay, so what will happen is that after market make this particular low, like it's what they want to go to the downside, we are going to see another move that will come back here and took out this particular high. This move we now took out this particular high, took out this high here. This move we now took out this high here. And also another thing you will also need uh, to confirm your swing failure pattern is that this particular move right here, this particular move, you could as well look at your RSI, which is relative strength index. The RSI is going to show you the strength of this move. And if you look at RSI for this move, you want to see a lower high on RSI. Let me use this what we have here on the live chart as example. If you look at the RSI here, this peak, this particular peak on Bitcoin made this high, but on this particular peak here, we made a higher high here, but on RSI we made a lower high. So you can use that as your confirmation. Like I said, you use it only as a confirmation to determine the strength of that swing failure pattern. You see, you made a higher high here, on the other side you made a lower high. So if you are going to trade this, you want to use the strength of that particular rally to determine if the swing failure pattern is going to hold or not. It's going to give you an idea on the strength of that particular move. So if I want to check the RSI, if I want to analyze the RSI to know if I should take this trade, is I'll have to check the swing failure pattern of this high and this high. If we are having something like this, let's say on the actual price action we have a higher high like this. And on the other side we have a lower high like this. Okay. Okay. So if you on the other side we have a lower high, but on the price action we have a higher high. That will be a perfect confirmation for you to get in on the trade, because we are having two confirmation here. So another thing you could actually wait is that you need to, I forgot to say this on time, but you need to wait for this particular move to come back below this level. Okay, before you enter, you need to see this you need to see this move up come back below this particular high. You need to see it to come below this particular high before you got in on a trade. You have everything you need. You have the swing failure pattern of this particular high. We have RSI showing a bearish divergence. Price action is going up while RSI is showing a weakness. That is the perfect example you need to get in on the trade. So guys, I hope you understand what I mean by this, and let me know what you guys think about this strategy. I can guarantee you that the strategy works so perfect. So you can use it for intraday trading. What will happen is that you need to go down to lower time frame. I will advise that you stay within the 15 minutes time frame to daily time frame and then weekly time frame. Uh, okay, because sometimes there are so many trades to take, but it depends on the time frame you are trading. If you are trading on a daily time frame, maybe you might be seeing two or three trades per month. And if you're trading on weekly, maybe you could be seeing like uh, one trade in a week, in a month. So it makes sense for you to, if you are that active and you want to pay attention to the market, then you could actually have go all the way down to 15 minutes to trade this particular swing failure pattern. Okay, so if you are trading on a 15 minutes time frame, I will advise that you took profit once market is hitting the previous swing low or swing high. Now, what do I mean by that? Let me look for an example here. Okay, let's say you got in on this trade. This is another swing failure pattern that happened on a lower time frame. So let's say you see this swing failure pattern happens, and you got in here. First, let's confirm the RSI. Okay, you can see the RSI here. Look at the RSI. Do you see these two candles? Do you see these two candles? But on RSI you have this, and then this candle also took out this high. It has already trapped so many traders here. So it's a good swing failure pattern for you to take. But then, because we are watching, this is a trade we are taking on a lower time frame. We do not know how long this is going to be, but we do know that the previous swing low we have before we make this high is here. This is our previous swing low we have. Basically, you should be targeting to sell here, but I will not actually advise that because this is a lower time frame trade, and we don't know if the swing failure pattern is going to cause a reversal that will lead to a daily that could cascade to daily time frame. So let's see. We got to that low, but we didn't actually come all the way down to this particular swing low. So it makes sense for you to determine where we have the next liquidity zone or where we have the next support or resistance. Let's say I took this trade here. The place I will be looking to sell to close my trade is actually between this level, between this zone. Because if you look at the previous price action on this particular candle, we have so many activities here. We have so many activities here between this high to here. So I do know that this is where we have big trade occur. We have big transactions on this particular level. There are a lot of buying and selling on this particular level. Market goes sideways, we came down. So I know this is the place for me to start selling. Another thing you could use is that you could use what we call Fibonacci extension. Is another good, another fantastic tool you can use to take profit. Let's say you draw your Fibonacci extension, you can start looking for to take profit at let's say you could try to be conservative and look to take profit from 382. Actually, maybe you don't take the whole profit. Maybe from 382 you start closing your position or move your stop to that level. So, or you could actually look at the swing highs. These are after the market took out this particular high, we started making a lower highs. So you can try to move your stop loss on those highs. Okay, because you can try to move your stop loss at this previous swing highs. As market is going down and making swing high, you'll be moving your stop loss with based on those swing high. Okay. So Fibonacci extension is another tool you can use to take profit. Okay. Or if you do not want to use the Fibonacci, then another thing I highly advise is that you use you look at where we have a big liquidity, where we have the next support is another thing you could look out for, because it's a lower time frame trade and we don't know how long the reversal is going to be. So it's a trade you really need to pay attention and watch the market and the trade very well to determine where you will be selling. So you don't need to be greedy unless you are taking a trade on a daily time frame or weekly time frame. Then you can start looking at leaving your trade up to day or weekly or week. But if you're taking it on a 15 minutes time frame, maybe if, I can't just tell you how long you can leave it, but you just need to make sure you're watching the market to see how the price action is moving, because this is a lower time frame trade. It's a 15 minutes time frame trade, and you don't know if that is going to hold for a long period of time. So when you took the trade, make sure you watch the market closely to see how the trade is going, the price action is going to react. And also, I can see we have another swing failure pattern here. Okay, I have another swing failure pattern here. Here, do you see that we took this particular move, took out this high, and if we check RSI, let's check RSI and see. Look at it here. On RSI, we have this. Why on the price action? Why on the price action we have this? A lower high. So it's a perfect trade for us as well. Or like I said, it's a lower time frame trade. So if you got in, make sure you are watching the market. Make sure you're paying attention and see how the price action is developing. We eventually came went all the way up to those that previous high. Okay, so swing failure pattern is a very effective trading strategy. You just have to be patient and wait for it to develop, because if you jump in way too early in the market, you will be used as exit liquidity, and other professional traders are going to get in when the market is stopping you out because you got in early. And that particular price you have your stop loss in is where is going to be where the whales and the professionals are going to start getting in on the market. Okay, I hope I make sense explaining how the swing failure pattern works. So you need to pay attention and be patient. If the market is not, if you feel like market is not going to take out that high, it's just a matter of time. Okay, because if you look at what's happened here, we have these lows. This is a very this is the low we have. Let me try to. We have these lows here. When market made this particular this low, so many people would have taken a trade here. And if those trades are the ones that are waiting for market to creep to the other side of the trend for them to take profit, then market will come back and stop them out. This is how Bitcoin works as all the time. We always get a bounce, but the trade you want to take is the one that caught people, is the one that stop people out, is the one that trick people and trap people. That is the trade you want to take. If you see this trade and you are patient, you don't want to FOMO in because market is going up. You feel like I need to get in on this trade. The market is pumping. That's exactly the game the whales are trying to play with you. They want to trap you. So what you do is that you hold yourself down and say no. I'm not going to get in and trade this level. I'm going to be patient simply because this video taught you to do so, and you are going to wait until market came back to trap these people out, because the reason market keep reversing from here is because there is no enough liquidity to move to the upside. Big players need to sell, big sellers need to buy, but there is not enough liquidity for them to exchange in the market. So they need people, they need to trap people, they need people to come in or people to be stopped out for them to get in on the trade or get out of the trade. So you need to wait until people are being trapped for you to get in on a trade. Okay, so the swing failure pattern is very effective. The only thing it requires is your patience and confirmation. You need to be patient and confirm using the RSI. You can get RSI by going to your indicator chart on TradingView and type RSI and type for RSI. This is a relative strength index. You just get the relative strength index and add it on your chart. I'm not using any configuration. I only have to change the color of my RSI and also increase the line size. I think that's the only thing I did. I increased the line size, so it's going to be more visible for me. So I'm using the default setting. So you can also use the default setting and use it. So there are so many examples of this swing failure pattern. We can keep going, and I will show you so many examples. Some of those some of these highs you are seeing here, you just might need to go all the way down to 5 minutes time frame for you to spot the swing failure pattern. Like what we have here, we have the swing failure pattern here. We have the swing failure pattern here, but this is another intraday trade. Is another. So we don't know when you are taking all this swing failure pattern on a lower time frame, your profit is already guaranteed, but how long we are going to stay in the trade is what we don't know. Is what we don't know, simply because we are taking the trade on a lower time frame, so we don't know how long the trend is going to stay on that particular direction. So if you have gotten in on this particular swing failure pattern, the first target you should be looking at, because this is a lower time frame trade, the first target you should be looking at is the previous swing low, which is 1% drop to get to your previous swing low, which is this. This is the previous drop with swing low we did before we moved to the upside to take out this side. So your first target should be here. At least you are trying to be conservative because you took the trade on a lower time frame, which makes perfect sense. So you target here, and if market comes back and took out this low, your next target will be here, and then you took out this, your next target will be here. You keep, this is how you keep moving it. Your next target will be here. This is actually a big level because market moved sideways here before we broke to the upside and make this high. So your next target could be here, and that's how you keep doing it until market stops you out and you're already in profit. So you can take the trade on any time frame you want, but how you are going to trade it differs. How you are going to trade it will not be the same. Like I have just demonstrated, if you are taking it on lower time frame, make sure you keep moving your stop in profit the moment market keep making a swing moves. Okay, so if we go back to lower time frame now, look at this. Look at these highs we look at these three highs we put here. They are all swing failure patterns. This high, all these three highs here are all swing failure patterns. But you are not currently seeing it being a perfect swing failure pattern simply because we are looking at 15 minutes time frame. So if we decide to go back, if we decide to go down to, let's say, 3 minutes, you are going to see how okay. One. Why is it not allowing me to go back? Huh? So I'm trying to see if I can zoom in on 3 minutes to show you how that could be a perfect trade for us. This is on September 26th. Okay. I think there's a way for me. There's a way I can jump to September 26th. No, 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 no. Because that is a perfect example for what I want to show you. So it's going to make perfect sense for me to give you that as example as well. Because with this strategy, you could as well trade it on intraday. If you're a scalper, you can also use it to scalp. So I don't want it to be that swing failure pattern is more of a swing trading strategy. So you can use it to scalp as well. There's a way I can jump to the chart based on the date I put, but based on the date, but I don't know how to, don't really know how to jump, use that. Uh, we're almost there. Is this the lowest it could go? Let me, it's not allowing me to go all the way back. It's not allowing me to go all the way back, but we have another example here, so maybe I can use this to show you what I mean. If you look at this particular level now, this particular move here, you have a swing failure pattern here, and if you look at this on a 15 minutes time frame, you will not be able to spot it. Okay, it's here. You can see it on this 15 minutes, uh, but we will not be able to notice that on a 1 hour time frame. You will not be able to notice that this is a swing failure pattern unless you are on a 15 minutes. Then you will now see how perfect that could be a good trade for you. So it's a swing failure pattern, and the problem is that you are taking it on a lower time frame, and you don't know how far, how low we could go because it's a lower time frame trade. So if you have gotten in on a short here, let's say market took out this side, took out this and closed below it. You got in on a short. The next place you can target is here because it's the last previous swing low we have. It makes perfect sense for you to get targets here just for you to be conservative because it's a lower time frame trade. But the problem we have is that it might not be a good risk to reward trade simply because the amount we are risking is going to be way too high for the place we want to take profit. If you decide to be great, if you decide to target this level, that would be a good. That's when we it's going to be a nice trade to take based on the risk to reward. And market eventually comes to take out trade to this level. Okay, but I'm not sure I will be taking this trade. If basically if it's me, I'm not sure I'll be taking this trade because the risk I will be taking, the amount I will lose if market comes back to take out this side is way too high compared to where I want to take profit. Okay, about 0.6 percent compared to where I want to take profit, which is like 0.6%. So my risk to reward is not that much favorable. But if you see a risk to reward that is a 1 to 1, I think it's quite okay as well because this swing failure pattern hardly fails. Is very perfect, and if you decide to trade only swing failure pattern, I can guarantee you that you will grow your account because it's the perfect strategy for big traders. So many big traders only trade this swing failure pattern. They watch the market, they watch the chart, but they don't want to get involved until swing failure pattern happens. Okay, we have another swing failure pattern on this low as well. After we make this swing failure pattern here, we have another one on this low. We have another one on that low here. Do you see that? So if I check the RSI as well, just so we can confirm that what I've been so I can confirm that what I'm saying here is true. If you look at RSI here, this is our move where the market make higher high, and this is RSI making a lower high. This thing high, higher high, lower high, and let's confirm on the low we have as well. This is another swing failure pattern we have on this low. You can see market made a lower low, but RSI made a higher low here. Do you see that? So that is the confirmation we need. So when you want to, if you combine the SFP with RSI, that's when it makes perfect sense. That's when your winning rate is going to go all the way up to. You could take up to 10 trade or with this strategy and have a 100% win rate. That is how powerful the SFP trading strategy is. And another thing you need to understand is that there are so many things you need to be aware to use the SFP. And first of all, you need to set alert. You need to be on alert. You don't want to you don't want to be late to the party. Okay. Let's say the market made this high right here. This is another swing failure pattern happening on a lower time frame live on Bitcoin right now. If you decide to take this trade, you could look to take profit around this level. Could be your first take profit. In fact, I think I should just take this trade, but when I'm done with this video, I'm going to take the trade, and my target is going to be here, and stop loss is going to be here. So if we confirm the RSI right now, you can see Bitcoin is making a higher high, while the RSI is making a lower high. Or simply because this is also on a lower time frame, we are not going to really be very greedy with taking profit. So if you're taking the trade on lower time frame like 3 minutes, 5 minutes, your take profit needs to be aggressive. You don't need to be greedy to wait for big drop to happen. So if you're taking on lower time frame, you need to aggressively take profit, because I'm seeing on the RSI we are not really confirming this high with this high on RSI. If you check on RSI, this particular move, this particular candle to the upside makes is higher than this particular one. So it's another thing that is making me not to gotten on this trade, because I think we are going to eventually form a swing failure pattern, but I don't think it's quite yet time for me to get in on the trade. So what will happen is that we could just be patient, and market could end up going sideways. Market could end up coming and going sideways here, going sideways like this, and after some hours or some days it will come back to take out this particular high and then come back below here. That's when I will get in on a short. Okay, even though market is going down, but for the fact that RSI made a higher high, so what is making me not to feel comfortable to get in on the trade. Other than that, it should be supposed to be a good trade, but I want to make sure that RSI is confirming my strategy for me to get in on a trade. Okay, you can see on the 4 hours, what we have on the 4 hours. You could just be patient, and the opportunity is going to come. You are really dumping hard. It's really going down hard right now. Do you see? It's really going down hard. This could be enough for you to take profit, because it's a lower time frame trade. But it's a lower time frame trade. We don't know how long this drop is going to be, but if you are taking the trade, your stop loss will need to be here. Or less, if you break down from here, your next target is going to be here. Okay, I'm not sure if there's any other thing I need to cover. So guys, that is all I have for you in this video. You can see the trade we have on a lower time frame is developing, and it could be that would have been a good shot. I just wasn't if you check, what happened is that I'm just seeing it now that on a 3 hours time frame, I could have gotten in on a 3 hours time frame, because the 3 hours was perfect for us. Look at the RSI on 3 hours actually made a lower high. This high is lower than this. Let me zoom in to show you. You see this particular high, this particular high, there is a very divergence also on RSI. This high is lower compared to this side, but price action is high. So that would have been the confirmation I need to short the market, but I wasn't looking at the 3 hours time frame. Rather, I was looking at the 5 minutes time frame. So guys, you can see that this strategy works perfect. So the things you need are the RSI and then paying attention to the chart. So what I wanted to show you previously was that you could set alert when you spot the peak of the area you want to trade. You can set your alert on that particular range. You can set your alert here by you right click, add alert, and you could set alert to crossing or leave it at greater than every minute and create alert. That means uh the trading view system is going to alert you when the market starts to trade above that particular price level you mark, and you already know that that level is the level you are watching to trade the market. So once the alert starts blowing up, you could just got in on the trade, and you're not really got in on the trade, you could just got in on the chart and start watching how the price action is going. Start paying attention, look at the RSI and see if RSI is making a lower high. There's a bullish or bearish divergence developing on RSI, and that is the confirmation you need to get in on the trade. So guys, that is it for this particular strategy. And if you enjoy this and you like this, you want me to continue to show you more of this strategy you can use to make good money in crypto, then do let me know. Make a call. Subscribe to my channel, like and share my video, and I will see you all in the next video where I will share my next strategy with you, because see the market is already going down right now. Okay, so guys, that is it for this strategy. Thank you so much for your time, and I will see you all in the next video. Bye.